The enterprising investor is to buy them only when obtainable at bargain prices, which we define as prices not more than two-thirds of the appraisal value of the securities. What would happen if all investors were guided by our advice in these matters? That question was considered in regard to foreign bonds on P 138, and we have nothing to add at this point. Investment-grade preferred stocks would be bought solely by corporations, such as insurance companies, which would benefit from the special income tax status of stock issues owned by them. The most troublesome consequence of our policy of exclusion is in the field of secondary common stocks. If the majority of investors, being in the defensive class, are not to buy them at all, the field of possible buyers becomes seriously restricted. Furthermore, if aggressive investors are to buy them only at bargain levels, then these issues would be doomed to sell for less than their fair value, except to the extent that they were purchased unintelligently. This may sound severe and even vaguely unethical, yet in truth we are merely recognizing what has actually happened in this area for the greater part of the past 40 years. Secondary issues, for the most part, do fluctuate about a central level which is well below their fair value. They reach and even surpass that value at times, but this occurs in the upper reaches of bull markets, when the lessons of practical experience would argue against the soundness of paying the prevailing prices for common stocks. Thus, we are suggesting only that the aggressive investor recognize the facts of life as it is lived by secondary issues, and that they accept the central market levels that are normal for that class as their guide in fixing their own levels for purchase. There is a paradox here, nevertheless. The average well-selected secondary company may be fully as promising as the average industrial leader. What the smaller concern lacks in inherent stability, it may readily make up in superior possibilities of growth. Consequently, it may appear illogical to many readers to term unintelligent the purchase of such secondary issues at their full enterprise value. We think that the strongest logic is that of experience. Financial history says clearly that the investor may expect satisfactory results on the average from secondary common stocks only if he buys them for less than their value to a private owner, that is, on a bargain basis.